right, welcome to another episode of ACY Cast, where we talk about the markets, Forex, trending ideas and events happening in the world and moving forward through the year. Welcome, Luca.
Thank you, Dave.
You having a good day?
Yeah, pretty grey day in Sydney, to be honest. Last couple of days was, only raining and yeah, not good. I like to do outdoor stuff, but unfortunately, it is what it is.
That's right, make the best of it, right?
Yeah.
So I've got a few questions for you. I think today we'll start with the recent NFP figures and your
Definitely.
take on that and how you see it affecting the DXY as well as the other Forex pairs and markets moving forward.
That's a very good question, Dave. Thanks for that. Indeed, we had a massive NFP. But the interesting thing is that if you actually go back and look to the NFPs on every January, like 7 out of 10 will be very high because of December months. People get employed, people get, they want more money because it's new year and everything. So people get employed, and therefore this came much higher. I think I don't have the real numbers, real figure, but I can remember sort of how it was. So the expected was like 150, 170,000. It came like 312,000. Okay, so it came nearly the double of what the market was expecting, and it did have a huge impact on the US dollar. We did had DXI breaking the 104 level, 104,000 level. Now it's ranging between 104 to 104,500. So it's between that level. I do believe that we can continue to have an uptrend on the DXY. As well, we did have, most of the other G10 currencies like Euro, Pound, Yen, CHF, Canadian dollar, and all of those ones, they lost power. Therefore, we did have a big decline on Euro dollar, big decline on Pound dollar, a very big up move on USD JPY as well. And not only the NFP came higher, but as well as the unemployment rate came lower and the average hourly earnings came higher. So all of the three that have been mentioned already in a few past videos that are important, they need to work. They need to work combined. So they need to be together to actually make sense to the market. Because it doesn't matter if you have a high unemployment, you put it million people new on this month, but your unemployment rate is very high. And then your average hourly earnings, it's very low. So it doesn't make sense. But last month it did, and it was very strong to the market. So very positive for US dollar. I think there will be a continuation there. Yeah.
U.S. Federal Reserve, what's your take on their stance? Would you consider it to be where they're going to push back and they're going to keep rates higher for longer?
Ooh, okay. I've wrote it down a blog today talking about this. So if you guys don't know, if you looking at the video here or maybe Spotify, I don't know where this will be uploaded. I do post blogs every day. Talking about the market, talking about a variety of asset classes. Gold, in terms of commodities, economics, currencies, and politics, and everywhere. So I would recommend you to go and read my latest one. Today is the 9th of February. So just go to ACY website and you can have a look on learn and then market insights. But okay, let's make it simple. All right. Most of the other central banks around the globe will follow the Fed. The reason being is they need to have room to not depreciate too much the currency that from the country. So euro, pound, Japanese yen, whatever. So my takes are now that the Fed will move the rate cut that they were predicting to done on March to May. So there are a 1 month delay now for the first cut, because most of the institutions, including JP Morgan, Goldman Sachs, Bank of America, ING, MUFG, UBS, all of the big ones, they were predicting a first cut to happen on March. Okay, I was talking to my friends. I have a pretty big connection on fund management, and a few guys were expecting on March as well, but the other few were expecting on half of this year. So that makes me think now, is the market pricing a half of the year towards the half of the year, the first cut, or May? My personal take is that the Fed will cut now on May. So they came out from March, they prolonged it a month, and now they are on May. And this gives room to investors to keep the money there for longer. Because remember, I always do the same example. If you're an investor, you have millions, billions of money on your savings account. You go shopping around the world, right? Around the G10 economies. You look at US, 5%. You look at Australia, 2%. You look at Canada, 7%. Well, 7% is better than 5 and is better than 2. But how soon will they cut? How soon will they first cut the interest rates there, right? Because my perspective here is the US dollar would be stronger for the first quarter because of the first cut would be on the first quarter, on the March, right? But now it's on May. So the remaining month of March will maintain a stronger US dollar, and therefore fulfilling with much stronger NFP, much better CPI than expected, so much higher than expected. So inflation is coming down, but it's not as the Fed wants. They want even more lower inflation, so then they can cut the first. And I think most probably we're going to have the first cut now in May, 25 basis points in May, follow up by another 25. But it's too soon to say. We're only on the beginning of February. We need more data to come from US to actually look and get assumptions, I would say.
Nice. And other than the Fed and the central banks, what else do you see sort of moving, creating volatility in the Forex markets in the next, say, 2 to 3 months, other than the central banks?
Right, that's a good one. I think, on the Forex market right now, it's hard to exclude the central banks because they're very big on this at the moment. Most of the investors, they know that 2024 will be a very meticulous year and a very important year to cut the rates, for some central bank. But most probably the other thing will be the inflation. Okay. So CPI will be a big impact on the markets because this is what all the central banks are looking: unemployment rate, stability, and inflation declining. So these are the two, most of the central banks, okay? Some of them are looking to some more things, some of them are looking to less than this. But when we put all together, this is what they will probably be looking ahead of the next 2 to 3 months. And investors as well, right? Just don't get me wrong. Investors does make a big part of the Forex market, as we know. Forex is very usually used to hedge positions against big corporations, but the speculations, they are most probably looking to things like, as you say, central banks and as I just mentioned as well, the inflation. Moving forward, we are, I'm predicting a big volatility coming up this year, especially for US dollar, euro, pound, and yen. Even more if, the Bank of Japan, the BOJ, the chairman Kuroda, decides to get off from the negative NIRP. So the NIRP, it stands for Negative Interest Rates Policy. And the ICC, so that's the yield curve control. That's going to be very, very big for Japanese yen, and it's going to have a very good opportunity there to long Japanese yen. But if it happens, again, it will happen only towards end of this year. So this is my take. I think it's a very, very good opportunities coming to the market. There are good opportunities for this year, especially the first quarter, second quarter, when the central banks start to cut. We're going to have a lot of speeches as well. So definitely a good year to be on the market.
What's your take on there's a few geopolitical events shaping sort of the commodity prices, and is it sort of tied into that as well? To review on, say, WTI, oil, crude, stuff like that.
Awesome. All right. So let's cover here some commodities. Let's cover oil and let's cover gold. Okay. Let's go for oil first. At this moment, it's annoying, I know, but you're gonna hear me telling this again. the investors are not carrying not much as they were before for the Red Sea whole thing. It's happening, Iran and Hamas as well, all of these things that is happening. They are mostly caring about the not even US tensions anymore, right? Not even US and Iran as well. They are caring for central banks because this is something they can predict, and this is something they know that will shape the future of the commodity prices on a short period. Okay, so my takes for oil is that the WTI, okay, the West Texas Oil Index, is that it comes down for around $68. So right now we are trading 72, 73, just on that variance. Most probably we will have a drop to this 68, around 65, 68. 65, I think it's a lot, but on the short term, maybe 2 months, 68. So I'm bearish, basically I'm bearish on WTI. Now, coming to gold, we know that all the geopolitical factors and macroeconomic involved on the whole world does affect the gold price, right? Because gold is a safe haven, all right? Always have been a safe haven. Same as a few currencies, but gold always comes to be a safe haven. I've explained this yesterday on my webinar. There was a pretty good webinar yesterday. But if we look to gold prices right now, we're trading at $2,038 per ounce. If I'm not wrong, the last time I left my desk it was around this price. I do think we will come lower, to somewhere around 1,908. No, 1,908 to 2,000. All right, so that range there, I think it is very possible for us to come in the next month, maybe next month and a half, or even a little bit shorter if something big happen on the macro side. But right now, again, investors are looking for better options than commodities, and there are better options than commodities. We have bonds paying 4-5%. We have currencies strengthening. We have good central banks running. We have good data coming from US. So there is possibility that investors are switching maybe to pound, maybe to euro. That's my take.
Possibly to the indices like the S&P.
Definitely, yeah, definitely S&P, Nasdaq, all-time highs, yeah. Dow Jones 30, yep, you name it, yeah, good.
Your sort of take on the Aussie, sort of what's happening with the Aussie dollar, which is usually connected to the commodity trade and also China. So
perfect.
What's your take on that?
Awesome, that's a very good question. Thanks, Dave. So when we look to Aussie dollar against US dollar, right? Aussie against US dollar. We did have yesterday the PPI and the CPI for China. We had a higher PPI, so that's the producer price index, and we had a lower CPI, the consumer price index. That makes me think, right? That makes me think that balances some. That balances some because one come higher, one come lower, so the balance is some. It's like the NFP that I've mentioned for you guys earlier. But most probably Aussie dollar against US dollar will suffer a decline on the first quarter. All right, and this have been my take since last week. I've mentioned it already that I'm bearish on Australian dollar. Therefore, I'm gonna keep shorting it. But the problem here is there's one thing that can go wrong on this trade, because the whole RBA that they had this Tuesday was very clean. It was very clean for me. Okay, there's nothing out of control. They want to see lower inflation. They want to see higher unemployment, and they want to see lower. They want to see higher employment and lower unemployment. Pardon me. So we're not having this yet. Well, we are very high on inflation. Okay, we are very high. We are at 4.25, 4.50% inflation year over year. So don't get me wrong, it is a very high inflation, but we can't recognize the whole job that they've done between raising interest rates, imposing interest rate. That was kind of very helpful because we went all the way from nearly 8% last year to 4%, around 4% in the end of the year. So from January to December of 2023, we've reduced 50% of the inflation. So this is kind of good, but this is, this shows to us that they soon will cut interest rates, and most probably will be in Q3 of this year. And investors were priced in August, and now they're priced in July, the first cut for the RBA. Therefore, I continue to hold a short position on Aussie dollar until for now, for the first quarter. If I have any news, I'm going to come and upload to you guys.
Yeah. And just to clarify, that's your personal.
Yeah, it is my personal view. This is not trading advice. Nothing financial advice. I only take trades for my own good, and I share with you guys my ideas on why I'm taking it.
Yeah, well, thanks for your time, and enjoy the weekend.
Thanks, guys, and thanks, Dave. Thanks for the questions, really good, and hopefully I see you all in the next video. See you.